Well, look, welcome to another one of our webinars, and today the subject is about how to make UK property investments simple for expats. And I'm delighted to say that we've got two experts on this subject. So Chris Allen from Holborn's International Property Division and Johnny Conran from Seven Capital, head of the Middle East and North Africa. So two of the most experienced people I know in this field. Please feel to put questions in the chat section and we'll come on to those as we sort of go along. So over to you then, Chris.
Thank you, Linda. Welcome everybody. Thanks for jumping on. Next slide, please, Carl. So what we do at Holborn Property, we have partners that we do a lot of business with from property companies, and I'm delighted to say today it's Seven Capital, Johnny Conran. They have a fantastic, and he will go into a fantastic track record and a fairly unique company with regard to how they go around things. So I'll leave that to Johnny. But as far as Holborn Property is concerned, you can see that I'm not going to read it out, but we're an investment firm with a unique business model where clients who want to buy property, want to then invest in property, whether it be in the UK or elsewhere, we hopefully have the solutions. It's a one-stop shop. So not only have we done the due diligence on the property and made sure all the planning's there and the money from the developers there, we also have a mortgage company, and we also have a furnishing company. So hopefully it's end to end. Not only, and I mentioned the UK, but we do actually have assets in other parts of the world, mainly Berlin and Portugal in Lisbon. So we certainly cover most of the UK, but we're not an estate agent. We're a company that go out and look for that's going to be the best investment for our clients. So that's how we go about it, and that's why we do so much with Johnny at Seven. Next slide, please. So, as I mentioned, research, that's the key to it. Obviously, a question that gets asked a lot, why don't I just jump on the internet and go to Countrywide? We do a lot of research for the properties we actually recommend to make sure, as I mentioned earlier on, there's planning commissions in place, that they are going to be good value and make money for clients. We have only 5 companies we deal with, along with Seven, and they have properties, whether they be in the north, the south, and certainly as far as Johnny's concerned, you know, the south is where they're most concentrated. And when it comes to complete property solutions, that's what I mentioned earlier on. That's the mortgages, the furnishings, the letting, the solicitor. And we have a company also that can help with people who want to put it in offshore companies and look at mitigating their tax. Next slide, please, Carl. So this is what we look for when it comes to the research. I promise you, by the way, everybody, there's only a few slides from me, and they get even more interesting than this one. But the ripple effect, we like big cities, but more especially, certainly sort of going back to London a few years ago, the ripple effect where, because there was a rail line coming in called Crossrail, we liked little town cities outside of the main cities. We call that the ripple effect. And we've had enormous success. And obviously, Johnny's going to talk about that as well, when it comes to these towns that are outside of London, where people commute into London or wherever it may be much more quickly. Affordability, and that goes two ways: affordability for you, our clients, and affordability also to the tenants. What we need to do is to find out if it's, say, in Bracknell, that there is going to be people there who can actually afford to rent those properties. So that's the most important question that people want to know is, how quickly is my investment going to be rented out? So affordability is key. Regeneration, a lot of the UK is going through massive regeneration. Places like Birmingham, Manchester, Bracknell, huge amount of money being spent getting these cities and towns up to speed. Infrastructure, I mentioned railways. Going up north, it's going to be HS2, which is being built as we speak. And I also mentioned Crossrail, which goes from the west to the east, all the way across London. So infrastructure is a huge consideration when we're looking at doing the gentrification. I think that goes along with regeneration, where they are actually spending money on making, for example, Liverpool Waters and Manchester and Bracknell and Slough, where there's so much money being spent making these places look more desirable, I guess. Next slide, please. I mentioned earlier on 7. There are others that we do business with. We hopefully can cope with all appetites. We have agreements in place with these developers that give us exclusive access to these developments, which means you're hopefully going to get the project you want in the right town, the right purchase price, and arrange the mortgages. We do the due diligence, I mentioned that earlier on, and that's with the solicitors, ourselves, and obviously 7 Capital will be doing their due diligence on not only the market, but also you know, the laws, etc., around that area. Next slide, please. So this is how it works. We do the research and we maybe do an underwrite. Underwriting is where we say to the developer, we're going to take a certain amount of stock and we're going to put some money down to hold those. Solicitors are conveyancing, we'll recommend solicitors, 7 will recommend solicitors, or of course you can use your own. Monthly site visits, we send videos, pictures of how the projects are going along. I reckon about 5 to 6 months before a property is due to complete, we would then introduce you to Holborn mortgages so you can get the mortgage underway. 5 or 6 months must sound like a long time. It certainly wasn't like that in the old days, but now with what's going on, we like to get everything sorted out. You've got your mortgage in place, so there's no last minute dashing around. The in-house letting, I know that Johnny will talk about that. Make sure that, again, not maybe 5 or 6 months, but maybe a month before, depending on the market, we'll actually get the appetite for the properties ready to be let out immediately. It's obviously actively managed by the developer. Tax insurance, I mentioned earlier on, we have a company that can talk to people if they do want to put it into a special vehicle that will help them. Certainly people that are looking to buy and build a property portfolio, always worth looking at. And finally, resale. We can hopefully help you when you get to that point. We don't have a flipping market. None of our developers we deal with talk about flipping. We like all our clients to go through to completion. Next slide, please. Why property? I think probably everybody's parents said, you know, buy a property as soon as you can. Certainly in England, that was the appetite. This is a medium, not a short-term, medium to long-term wealth generation. It's the only asset really you can actually leverage with a mortgage. And there aren't many others that I can think of that you can actually. So when it comes to leveraging, when you're going to put, let's just say 35% down, that's the money that's working for you. The property goes up by, you know, 1.5 times in 5 years. It's your 35% that's doing the work. And obviously the mortgage is the one that's levering it up. We always say historically stable asset class. Everybody knows that property, obviously it has its dips, but I don't think there's any period in 5 years in the UK anywhere where property has not made money, no matter where you take it to and from. Illiquid, yes, that's probably the downside. Unlike stocks and shares, bonds, you know, it's not as liquid as maybe they may be. But I would say, and I think a lot of people believe, it should be a stable part of anyone's portfolio. Next slide, please. Yield and capital appreciation. Yield, that's the income that's generated. You can see the sort of way that that's worked out. And of course, younger people like myself are looking for capital appreciation mostly, where, as I mentioned before, property prices are going to go up in that area from all the due diligence and research we've done over the market average. Yield, for somebody who's slightly older than me, maybe looking for a property that's generated a good yield to help with their retirement. So I don't know about you, Johnny, you might touch on it later on. Very difficult to get those two things together. Next slide, please. Yeah, I've mentioned a few regional cities, although we obviously have got London, and I mentioned Berlin and Lisbon, but Birmingham, Manchester, Liverpool, Leeds, down to Bracknell, down to Slough, Basingstoke, London. These are areas that we've concentrated on, and you can hear my voices going. So yes, next slide, please. A cash flow, I'm not going to go through it, you'll be delighted to know, but this is what everybody gets. No matter where the product, which project, and that has everything on it, from the amount, the purchase price, how much you're going to need to put down. Obviously you can change that. Somebody wants to put 65% down and whatever, you can change that, and that will alter the figure at the bottom. In this particular example, with all the solicitor's fees included and everything else, you can see in this example, somebody would be £352 above water on a 25-year mortgage every month. So we can actually give those to Linda, and Linda can get these out to you for any project, Next slide, please. So I think
we're done.
I think there are no questions come up. So I'm going to pass you across to Johnny. And Johnny, you can tell us a little bit more about Seven and your expertise in that market. Any questions, please don't hesitate.
Perfect. Thanks a lot, Chris. Let me just share my screen. Okay. Has that come up, Chris?
Yes, thanks.
Perfect. So yeah, look, as Linda and Chris mentioned, my name's Johnny Conran, and I'm head of the Middle East and North Africa for Seven Capital. And I'm just going to give you a bit of an overview first about who we are, who Seven Capital are as a business, and then look at a couple of our developments that we're building in the UK at the moment. So to start with, Chris has mentioned it again, but one thing to point out is Seven Capital, we are the developer. We're not an agency. We don't work on behalf of anyone else or as a third party or underwriter. We are actually the developer. So not only that, we not only buy the land ourselves, but we also build everything ourselves as well through our own construction company. So you'll see there on the right, Holborn and Construction. That is Seven Capital's own construction company that has built our properties over the last 12 years that we've been in existence. So that gives us another sort of element to us as a business, which most developers don't have. The usual model is to go out to tender, go out to and find a contractor to do the job. Whereas with us, we decided to do it in-house because it gives us the complete control of quality. We really want to focus on our brand being built around the quality of the product that we deliver. And having our own construction company obviously helps us do that. So to put that into scale, Holborn in 2019 were the 5th most contracted construction company in the whole of the UK. So they're a big part of our business, 2,000 staff, and as I said, give us that added edge. Under the Seven Capital Group, just for your knowledge, we have a media company, homes, events, all pretty self-explanatory, and then also Seven Retail and Seven Industrial, which are things like the sheds that you see on the side of the motorway for Amazon and DHL. We build those, and other sort of commercial elements around the UK. The other two parts to mention are the Park Regis. You may recognize that brand, the hotel chain. There's about 40 of them around the world, and Seven Capital own all of those. And then lastly, Synergy Bank, that previously was the Bank of Cyprus that we acquired 3 years ago. We took it with a loan book value of $1 billion. It now sits at just over 3 billion. So the whole Seven Capital Group is worth just over 6 billion pounds. So look, it's really important to mention the sort of these kind of things, especially nowadays when people are sort of concerned quite rightly about the impact of what we've been through and the ability for companies to or developers to deliver property. We're talking about something tangible here. So you want to make sure that it gets delivered and to the appropriate quality that you signed up for. So having said that, you want to make sure that you're looking at to deal with the big developers, the ones with the track record and the ones with the sort of weight behind them. And so what this slide represents is the strength of the group of Seven Capital, and sort of, pointing out that in the UK at our level, and what I mean by our level is our price point, Seven Capital are the market leaders. So yeah, really important slide and shows the extent of the Seven Capital Group and who we are. Focusing on the residential development that we're talking about today, we've built just over £2 billion worth of property, 6,500 units around the UK. So as I mentioned before, a strong track record. These are some of the developments we've completed. It won't mean a lot to you. We've got another 764 million, 11 developments that are under construction at the moment. So there's a lot more sort of opportunity and offerings that we have coming up in 2021. So yeah, this is the scope for the future. Right. In terms of the actual process itself of buying a property, obviously, for those of you that have bought property before, you know that it isn't always a walk in the park. There's a lot to sort of collate in terms of documents and paperwork and solicitors and mortgages and things like that. So the sort of best thing that we can do is try and make that process as straightforward as possible. And we do that by offering a helping hand with every single side. So from the legal advice, from tax advice, FX, mortgages. 90% of our clients take mortgages. So obviously we're reliant on the fact that that works. The actual letting of the property and the furniture and things like that. We handle every single side of that from our own office within the UK. So one of our offices that's based in Birmingham, there's 50 people and all they do is deal with the back end from all of these different sides, which is, you know, very rare because often developers might say they help with this, but it's one or two people that are working on that as well as other things. Whereas with us, we have a committed office that all they do is get the process moving and get it sort of through as quickly and efficiently as it can do. And, you know, that's how we achieve our reputation and the awards that you see below here, basically on the back of that, because it is rare within the industry. So this is really important, particularly, you know, we have to come on to a presence overseas. I'm based between Dubai and the UK. And then we have offices in Hong Kong, in South Africa, in Switzerland. So for our overseas investors, you know, this is even more important that you're having that sort of helping hand when you're 3,000 miles away from the property itself. We're headquartered though in London and Birmingham. We have 3 offices in the UK, and we typically do 50% of our business in the UK and 50% of our business overseas. So to come on to our actual developments and where we're building and why, Seven Capital are an investment developer. So the areas that we choose to build are obviously areas that we believe are going to provide a substantial yield, but also, and probably most importantly, capital growth over the coming years. And so we base these decisions on where we buy based on the fundamentals, supply and demand imbalances, commercial commitments, transport links changing. And that's where Seven Capital have been really successful over the last 12 years, is choosing the right sites and buying at the right price, whereby everybody is winning in regards to their return. So one of the places that we're focused on at the moment is Bracknell. For those of you that don't know where Bracknell is, it's to the west of London, about 20 minutes west of Heathrow, 5 minutes from Ascot as a reference point. And to move on to this slide, the reason that we've committed to Bracknell twice actually is because all of these names on your screen are based in and around Bracknell. So these are some of the biggest companies in the world that are headquartered in Bracknell. So you've got your Fujitsu's, Oracle, Honda, Microsoft, Hitachi. These are some of the biggest blue chip companies, as I say, that are headquartered in and around the Bracknell vicinity. So what does that mean? It means that there's huge demand from the employees of these companies that are earning good salaries, being the head offices, but don't have the appropriate property within Bracknell because of the history of it not being built, which I'll come on to. So there's huge amounts of commercial commitment in Bracknell. I mean, so much so that Boris Johnson actually said at the beginning of last year, as a slightly tongue-in-cheek comment, that Bracknell would be the epicenter of global free trade post-Brexit. And as I say, slightly tongue-in-cheek, but the reason he said it is because of the vast amounts of commercial commitment there is within the town centre and surrounding areas. So this exists. These companies are already there. Its location, as I mentioned, 20 minutes from Reading, 20 minutes to Heathrow, and a 50-minute direct train into Paddington. But the big story is the regeneration of the town itself. So we've talked about the commercial commitment, but it's all very well being a place to work, but is it a place to live? And this is what has been changing through £770 million worth of regeneration coming from Schroeder UK and Legal in General. And the first part of that plan has been to create this lexicon centre. This is a big shopping area, bars, restaurants, cinema, and sort of higher end of the market in terms of the retail, your Marks and Spencer's, Waitrose, Armani, L'Occitane, those kind of brands. And this completed at the end of 2018. So in 2019, before everything happened with COVID, there were 6 million people that walked through that area in 2019. So it's massive footfall, great exposure to Bracknell, and changing it not just from a place to work, but offering the amenities of a place to live as well. So that's really important that this investment is there. And of more importance, this is where we are now, this grey area. But what's happening is over the next 11, 12 years, obviously the town is reshaping. So the infrastructure is going to completely change, and it's going to expand out and out, as you can see through these photos. So you often hear about people talking of, I wish I'd invested in that area 10 years ago. Well, Bracknell is that place 10 years ago. It's right at the beginning of this growth. And the sort of the best is yet to come in that town. So what does that mean? It means from a price per square foot perspective, we can buy at a certain price, sell at a certain price. And as the demand increases, as the town regenerates, obviously that's going to become more expensive, and our clients are going to make appreciation during that time. So in terms of the product itself, we actually have 2 developments in Bracknell. Number 1, Thames Valley. This was complete in November. So what you'll see on the right-hand side are real photos. Those are photos of the actual internal units. So the studios and 1-beds that we've built, and that's how we furnish them. And the beauty of this development is, although we handed it over during the second lockdown in the UK, we've actually managed to rent all of them. So all of them are being sold. The remaining units in there are sold rented. So your clients, you can buy, as a client, you can buy a property that has furniture in it and has a tenant already there, which means that as you complete, obviously you're getting an immediate yield from your investment. So that's a great thing to be able to offer. And as I say, it's brand new. It completed at the end of 2020. Contrastingly to that, we have the Grand Exchange, which is not complete for another 2 years, offering something slightly different. Obviously, you pay a deposit of 20%, and then you don't pay anything or start your mortgage or start the completion process until the end of next year. So slightly different offering. In terms of the development itself, this will be the flagship development of Seven Capital in terms of the quality of what it's going to bring. You have a gym, you have co-working space, obviously incredibly relevant now to have a co-working space within the development. You have spa rooms, 24-hour concierge. It really is high quality, the kind of stuff that you would expect to pay £1 million for in London, but you're paying £280,000 because it's obviously in Bracknell to the west of London. So something that we're really excited about as our flagship development. And yeah, as I say, offer something slightly different, whereby the other one is ready, finished and tenanted. This will be finished in 2 years' time. Again, what we do with all of our developments is before it completes, we will start showing the show apartment and getting them let out so that you have a tenant for your completion regardless. So that's Bracknell. And lastly, just to go on to another area that we're building, is Slough, which is closer to London, again to the west, but an interesting investment story and a very sort of renowned now investment story, because again, didn't have the best reputation, but got a huge amount of investment. And some of these huge companies that you see on your screen are based there: Telefonica, Ferrari, Amazon. And these, again, are headquarters. So Slough actually has more European headquarters than anywhere in Europe outside of London. So that's a really big sign of how much commercial commitment is there. So you've got this massive demand from the local market and from people working in and around the Slough area. But with Slough, what you also have is the commuter demand, because Slough today is only 18 minutes into London Paddington. So that's an overground train that goes once every sort of 25 minutes. So that will get you into zone 1 of London in roughly 15 minutes. So that's incredibly quick. And, you know, for those of you that know London well, I mean, having lived in zone 2 of London, it could take you longer to get in there. So it's a really quick commute. But you've also got the benefit of being close to Heathrow, being close to the countryside and well connected to the motorways that take you around the rest of the country. So it's really, really well located. But even more excitingly, towards the end of this year, we're going to have Crossrail being delivered. And for those of you that don't know, Crossrail is the extension of the Underground line. It's going to be called the Elizabeth line. And that will be a train that comes every 2 minutes and goes to Paddington, Bond Street, Tottenham Court Road, Canary Wharf, all on one train every 2 minutes. So that's really going to change the game. You're going to be able to walk outside of your apartment in Slough and get to every area of, or the main hotspots of London on one train in 30 minutes. So naturally, when that's delivered at the end of the year, that will boost demand even more. So again, you have the commuter demand and you also have the local demand. And obviously on the basis of that, JLL and the PLC agents that we work with are obviously predicting substantial growth over the coming years based on the delivery of Crossrail and the actual regeneration project that's going on in the middle of Slough due to all of the commercial commitment there. So it's getting more exposure, probably more so than Bracknell, based on the fact that it is slightly further down the line, whereas Bracknell is right in the infancy of its regeneration and growth. So what do we have in Slough? Again, we have an offering here, which is ready complete, which is opposite the business parks. It actually looks at Telefónica's head office. It's a small development, only 50 odd units. And again, furnished, tenanted, ready to go. All of them are rented, all predominantly on corporate tenants. So high quality tenants that are living in there that want the sort of luxury finish. And yeah, again, a fantastic project, literally walking distance across the road to thousands of jobs. And then the other one, which is just completed now, so it handed over last month, is literally right by Crossrail. So this is a 50-second walk to the train station, which takes you into London Paddington in 15 minutes, and the same train station where Crossrail will be at the end of this year. So it's a fantastic development. It's pole position in Slough. It really, you can't get a lot better than this location. And these units are larger units. They all have balconies. It's a privately gated area with a garden in the middle. And again, these are real photos on the right. They're furnished and they're tenanted as well. So the fact that I can tell you about all of these properties that we're selling, other than the off-plan development being tenanted and furnished, is obviously testament to the quality of what we build, and also of the way in which we use our agents that we work with in the UK to rent them quickly, because as I say, it offers you that ready-made option, which is quite rare to find in the UK. So yeah, so these are 4 options that we have, 2 different locations. We do have a couple of other areas that we're building, but we'd be here for a lot longer if I went through all of them. So if you do want any more information on either of these areas or projects, or any further information, then obviously do ask, or let myself, Linda, or Chris know. Thank you very much.
Thanks. Does anybody have any questions? Oh, there's a question come in from Angela. What deposit would I need for a mortgage? So Chris, can I give that one to you, or Johnny?
Yeah, I mean, I can take that.
Sure.
So Angela, it will depend slightly on where you're based as well. But the maximum LTV for overseas investors or buy-to-let investors is 75%. What you will often find, sort of managing expectations, is that some of the lenders will offer slightly less, so maybe 65%, maybe 70%. So the ballpark figure is between 65 and 75% in your personal name. But as I say, it will depend slightly on where you're based, what passport you hold, depending on what options you're going to get. But yeah, for your budgeting and for your reference, between 65 and 75.
Thank you.
Chris, do you want to add anything on that?
No, I agree. I mean, I always think be safe and look at 65, 70. But yeah, I do know you can get 75 and more actually if you buy to live. But yeah, no, that's good advice.
Yes, obviously the more you can put down, the better rates you might get, and the more opportunities you've got with the lenders. Because we have seen over the last year, when the lockdown started, a lot of lenders pulled out of the market because they were unsure of sort of job cuts. But unfortunately now we're seeing a lot more come back into it. So we've got more opportunities.
Yeah, I think that the mortgage market that we're in at the moment or coming out of at the moment, has been tough. The position of risk from lenders is obviously slightly higher than normal, but the general consensus within the market is that that's going to get better and better as the year goes on. Obviously, we've seen positive sentiment around the UK, which has been reflected in the currency as an example, and going into next year as well, it will be on the rise in terms of banks wanting to lend on investment property.
Okay, another question for Johnny. Is parking available?
Yes, so all of the developments have parking. They're in the UK, it's a separate lease, so you pay separately. It's an additional cost, and depending on where the location is, it varies from £10,000 to £20,000. But yeah, as I say, all of them have it available. The majority, just thinking of what we just showed you, the Grand Exchange in Bracknell and the one by Crossrail in Slough both have underground parking, and the other two are privately gated but overground parking. But yeah, that parking is at an extra cost, but you get your own lease for that parking spot and your own designated parking area.
And I guess lots of people don't need parking because they work so close, either going to jump on the train or in Bracknell, they're all walking distance from the offices, the head offices.
Yeah, I mean, look, having parking is never going to be a detriment. It's always going to sort of add weight to your investment. So it's always recommended. The agents will always recommend buying one. But as Linda says, particularly with the Slough development by the station, you are literally, less than 100-meter walk to a train station. So I think that's probably going to be the main motive of the tenants.
Okay. Any other questions? Oh, here's one. Is it possible to get a loan on equity increase to put down for another apartment? Oh, I can't read the whole question. And how much will? So Ahmed, yes. Are you talking about having an existing property that you want to take an equity release on? Because yes, that's possible. We can remortgage your first property, whether it's your home or whether it's an investment property, and then we can look at putting some of that money down or all of that money, whatever you need, on a deposit. But happy to have a separate conversation about it with you, a little bit more complex, but certainly we do that all the time. And I've just recently gone through exactly that exercise for somebody buying the Grand Exchange.
Yeah, again, yeah, just to add to that, quite a lot of our clients that own property will remortgage, release equity to fund their purchase. So yeah, definitely something that Linda and myself can help with.
Yes. Any other things, Chris, from you?
No, I think that answers them all. You do mortgages. We also have a mortgage department. So if you'd want any help on the remortgage side, then let us know. It's safe to say also on a remortgage, you can actually borrow more than the figures that Johnny and I have said.
Can do. But generally what we suggest, if anybody's interested in the subject, have a conversation with me. And then, of course, I'll introduce you to Johnny. And we'll take it from there, but we'll sort of work out with you on your individual circumstances. So we've given rough ideas of mortgages, but we'll go through what actually suits you in particular, because everybody's slightly different, and we have this all the time, don't we? There's no one size fits all with property.
And you've got stuff coming up north as well, or the Midlands, Johnny, I believe.
Yeah, we have one site already in Birmingham, again, ready, finished, tenanted again. So if that's of interest to anybody, I can send details of that. And then, yeah, we've got a few more sites that we're just going through planning at the moment in Birmingham. So yeah, there's going to be plenty of options.
That's great.
Fantastic. Okay, I don't think we've got any more questions come through. I think actually the presentation. Oh, have we?
No,
okay.
Ahmed's given his email.
Yeah, it's okay. The presentation always from Johnny and Chris is so thorough, pretty much covers everything anyway, doesn't it? So
I hope so.
Yes,
Yeah.
It does. Anyway, okay. Well, thank you very much, Chris and Johnny, for presenting today, and thank you for everybody that attended. And please do get in touch. We'd be happy to help you.